Let's talk about some market observations, what's happening, what's driving rates right now. So with general liability coverage, whether it's through your home or through your business, there's an increase in medical costs that are driving those trends. The litigation has grown, and it's a tight labor market right now. Even through COVID, it's still a tight labor market. These are all things that drive premium. What some of you might have seen on your property and commercial liability renewals over the last maybe 6 to 8 months is you've seen some increases in property and general liability. Those are pretty standard right now. It's good to shop. Not all of the carriers are looking at these risks in the same way anymore. That's the first thing I will tell you. Secondly, you may be in a situation where you get a renewal that's like 50%, and you're like going, what the heck is going on here? What's happening there is some of the carriers were late to report their request for a rate change or that they want to leave the market. There are carriers that want to leave certain markets, and if they don't report that in time and give you, the customer, plenty of time as a response, what they'll do is they'll over exaggerate on the renewals sometimes, so you don't rewrite. We've had property and commercial liability renewals with certain of the carriers as high as 60%. We know they just don't want the business anymore. Okay, so just be on the lookout for that. With property, we've had the catastrophic losses. This is even before COVID. Over the last 3 years, the severity of fire claims has grown, and there's been inflation with construction costs and the cost of labor. One point here I want to emphasize, and this is the same with commercial as it is with residential. Don't base your limits or your coverage on what you think that you can sell something for, what you can sell the building for, or what you can sell your house for. Like, don't go to Zulu and say, oh, I could sell my house for $300,000. That's what I need in coverage. There's a difference between replacing your property and selling your property. So if you want to rebuild or get the full credit on your limit for that property, you really need to look at construction costs and what it's truly going to cost to replace what you have. Very important lesson there. Auto, first of all, at the bottom, I know it's the last bullet point and I should have made it the first. We live in Florida. Highest rate of insurance fraud in the nation. So, and auto is a big part of that. We're also a no-fault state that has its own element to it. But there's been an increase in bodily injury. Pre-COVID, the miles that we were driving each year were on the rise. That's obviously dropped quite a bit, and I'm hoping you all got credits on your invoices. April, May, March, April, and or May from whoever you're with on your auto. Most of the majors were offering anywhere from 15 to 20% off of your bills. If you weren't with a carrier that was doing that, speak to your broker. But auto, a big change here that we need to consider is there's no such thing as a fender bender anymore. It isn't like the old days. Well, I've got a little fender bender. It's going to be $300 or $400 to fix it. When someone taps you, it wrecks the entire bumper now, from a construction perspective, as well as all the technology that we have in the bumpers now. Those literally have to be pulled off and removed. So what used to be a $300 claim in the past can approach $2,000 or more now, just for a fender bender. So be aware of that. And that's another reason why the rates are increasing on auto. Workers' comp, real quick, the rise in medical costs and pharmacy. I'm going to talk about the rise in pharmacy later on in this presentation. That's a big piece of workers' comp. The workforce is getting older. People are working later in life now, so there's higher risk of injury, of comorbidity, et cetera, et cetera. The wages are increasing, i.e. if the wages are increasing, So is workers' compensation rates. And honestly, even through this COVID situation, there is a shortage of skilled workers. So it's a highly competitive market, which means employers have to pay more for people. So that's driving workers' comp. Again, I'm going to have opportunity for questions at the end. If you have any questions, just be writing them down. Just some basic things for you to look at for yourself and for your business, and it applies to both. Understand the value of your assets. What do you have stored inside? What's personal? What's not personal, et cetera, et cetera. Understand your limits too. Just don't, the worst thing, and I'm going to talk about this too, the worst thing you can do is just quote your insurance. Make sure your broker and you understand what your needs are. Just don't accept the limits. Say, how did you come up with this number? That's the best question you can ask your broker. How did you come up with this number? Same thing that the broker should be asking you. Know your limits, know your exclusions. Sometimes it's in the fine print. It's later on in the contract, it's in the back. It's something that some of us ignore. Know the exclusions, because sometimes the premiums on commercial and individual insurance from a risk perspective, the way they can throttle those is by what's excluded now and what's not. So understand those exclusions. Understand your risk. What's your total risk? You may say, you know, I've got enough sitting aside in reserve. I don't need to have this much insurance. Sometimes insurance isn't the answer. That's the lesson here, really. Sometimes insurance isn't the answer. Sometimes it's, I need to change how I'm doing things. Is it worth me spending this much for insurance if I can just make this simple operational change or simple personal change that I don't have to buy insurance anymore, or I don't have to cover that anymore? Key around COVID, speak to your broker, speak to the insurance companies you're with. Many of the coverages on the commercial side, one of the things that drives rate, i.e. premium rate, one of the factors they look at is annual income, annual sales, and what you have in payroll. Your workers' comp, your CGL, some aspects of your property insurance, those are based on those numbers that you provided to your broker at the beginning of the year. If you've experienced losses this year all because of COVID, i.e. you're making less money, simple as that. You're making less money and you're hiring less people. The market, if you go to them, is being open to what's called a mid-term adjustment, which means if the premiums that you're paying right now are based on certain figures that aren't accurate anymore. Go back to the market now. Many of the carriers are allowing for a premium adjustment now as opposed to the end of the year audit. If a cash flow is an issue, this is a great thing to do. It can bring your insurance costs down up until your renewal. Most times we have to wait until the renewal to do this. If you put pressure on it, they will do it now. And the do-it-yourself is the last thing I wanted to kind of touch on, because it's happening a lot more with our agency, where we'll get phone calls or we'll get emails and someone will say, hey, I went online and I got this quote. I want you to compete with it. It's never going to happen. We're never going to compete with that quote, number one, because when you do the online quotes, you don't see all the detail. All you are seeing are some of the major things and what the premium dollar is. When you start to dig in and ask for policy documents, you'll find that sometimes the limits they're offering or the exclusions they're writing in really make it non-competitive in some cases. If you like to do it yourself and that's worked for you, great. Just don't compare what you're seeing online with what is truly happening in the market. Let's talk about business interruption. Again, this is one of those things that's top of mind right now with COVID and et cetera, et cetera. But business interruption is usually part of your property policy. It's sometimes called business income and extraordinary expense. It covers losses due to a claim from a covered loss that disrupts your operations and causes financial problems. And I'm going to go into that a little bit deeper. The main point here, and I'm going to reinforce it again, is those limits are strategic. They're forecasted. You need to Sometimes when you get a quote that includes this, it's just a set figure like $100,000 or $300,000. That may or may not be the right amount for you. It's really specific for your specific needs for your business. You need to do over to the right of the slide. You can see this is a business income statement. This is the kind of exercise that you and your broker should be going through to figure out what you need, because it's not the same for everybody. You may have an operation that you can shut down and open up at home. You're not going to have any interruption. You may not even need this coverage. You may be in a situation where you store a lot of product, or you have a lot of folks that you've got to pay through a loss. It's going to be specific for you. Walk through this exercise and figure out what you need. I'm going to talk about this a little bit more. It's sometimes called the time element coverage because it covers the time when a business is shut down until all the repairs can happen and you are operating again. You may have to relocate temporarily. Those expenses should be considered. You may need to rent facilities to store things. Those expenses should be considered in this. You may after this now say, I'm just going to be down for a month. You want to make sure you have coverage for that. You want to cover lost revenue. You want to cover extra expenses. You want to cover your payroll to pay your people through it, and rent and other payments. So it's not a throw-in coverage. Don't assume it's correct by what you get on your quote. Ask the broker how they came up with the number, or provide them an income statement so they can be scientific about it. There's limits with this. There can either be actual loss sustained, or they can actually set specific limits. If your exposure has an ebb and flow, like you have the most exposure during the third and fourth quarter, you're going to want this policy to reflect that your actual business model. And you want to look at the waiting periods, i.e. how long it takes for this to kick in, and the period of restoration, i.e. how long am I going to need this financial support in order to get back in business. So my recommendations here, very important coverage. Not saying you need it, but you should consider it and look at it and make sure. Have an income statement worksheet. Look at the past, present, and the future when you're looking at this. You have to keep good records. And if COVID has taught us all anything, we have to have a plan in the event of a disaster. Even if it doesn't impact us, at least have our staff and ourselves know that we're confident that we've got a plan through this. Let's talk about flood, another big one right now. Before we talk about flood, this is one of the common points that has some confusion sometimes. I'm gonna keep it real simple. You have flood and you have water backup. Water backup is usually part of your homeowner's policy, and it's related to a plumbing malfunction. That's probably the easiest way to put it. Then you have flood, which means it's excess water. Sometimes it's natural, sometimes it's not. Excess water on normally dry land affecting 2 or more acres or 2 or more properties. That's in its simplest form. Every square inch of the United States is either in a low, moderate, or high risk zone. So the summary here is we're all in a high risk. We're all in a flood zone. If it rains at your house, you're in a flood zone. That's probably the easiest way I can put it. All right. Everybody always says that flood never happens here. Talk to the people in Houston 3 years ago when they had the flood there, and nobody had flood insurance because it was designated as a low risk area and the brokers weren't talking about it. So if your broker's talking about flood, they're not trying to sell you anything. They are truly protecting themselves to have the conversation to say, you need flood. If you want it or you don't, you can sign I don't want it, but it should be part of the conversation. If it's not, make sure it is part of the conversation. Because here's why. 25% of claims in 2019 were in low-risk flood areas in the United States. And this doesn't include people that didn't have flood insurance. So this is only tracking the people that actually had flood insurance. So there's a whole other group of people, like the folks in Houston a few years back, that aren't in this number. FEMA reports that as much as 50% of flood losses happen in low-risk areas. And again, like I told you earlier, flooding isn't always a natural event. It isn't always rain. So the summary there is look at flood and consider it for your home and your business. It's important coverage and it's relatively inexpensive and it gives you peace of mind. Let's talk about cyber. This is huge right now too. This has to become part of your standard when you're looking at your business now. Just some quick education here. Cyber liability usually refers to an exposure with the technology, and cyber crime is theft, social engineering, or and counterfeit transactions, money stealing, et cetera, et cetera. One of the things that our industry did that I'm really hoping is going to change is when they called it cyber anything, the first response that people have is, I don't do any business online. I don't need it. And it's been a disservice that really has to change. And I hope if I do anything today, I change your mindset on cyber, because truly, I believe it's the most important thing I'm going to talk about today. Cyber is data breach. You could have an employee that left a piece of paper on a photocopier that has private information on it, or you could have had a laptop stolen, or you could have put something in the garbage that wasn't shredded properly and the cleaning crew picked it up and sold it to the black market. Now it becomes cyber because that information is then uploaded into the internet, and that's when it becomes cyber, but it's not an initiation always through technology. Know that, it's data breach. You'll find cyber's included in a lot of BOPs. A BOP stands for a business owner policy. Smaller businesses have those because it consolidates everything into one package and makes it simple for you. And it's included in a lot of CGLs now, commercial general liability policies. But look at the fine print. It only includes first party coverage. And what that means is that's insurance for you. Somebody hacks in to you. It has a final impact. It has a financial operational impact on you. You have coverage for that. And it's usually very limited though, and it's not enough usually. It may be $25,000, and that's not going to be enough, as you're going to see in some slides going forward. That's just first party coverage, and I'm going to talk about first party and third party, what that means. There's a lot more impact now because people are working from home, and employers and individuals don't control their wireless networks right now, and employers are getting hit because their employees aren't always being secure. They don't have good encryption on their laptops. It's happening rampantly right now. It's increased sixfold at a minimum. There's also scams going on, and a lot of organizations shut down any email that contained the phrase COVID-19, CDC, or WHO for the World Health Organization, because these, I'm going to call them scumbags because they are going out there sending emails that attract people, go, oh, it's important, it's going to be data, I'm going to click on this link, and it's a scam. And the minute you do that, it's created an event at your business or individually where someone's on your computer now. And we're going to talk about some of the things that are happening. And even though you don't feel the impact now, you need to be aware of it. If you capture a name and an email address, you have an exposure. Think about it that way. I don't collect socials. If you collect a name and an email address, you have an exposure for third-party coverage. And what that means is, here's an example of a real-life event. What's going on now? They'll get on your computer. They'll get on your computer personally or through your business, and they'll remain dormant. They watch what's happening in your business now. They watch your email traffic. Who are the players? Who's the CEO? Who's the bookkeeper? Who's the accounting? Do they do wire transfers? When they figure out the players, now they see your clients too. Who do they do wires with? Oh, it's Bank of America. Okay, and I'm just going to use it as an example. This is just an example. Use Bank of America. The CEO is Bob. and Sam's the guy at the Bank of America. I just saw a transaction. They'll mimic on your server the email thread. It'll look like it looks like the CEO sending a note to the accounting manager or whoever does the books, including the contact from a Bank of America, or it looks like it. Hey, we got to do a wire transfer. Boom. They've remained dormant until it's time to hit. They do the transaction, and that money's gone. That money's gone. I know a lawyer friend of mine who's representing somebody right now who was involved in an $800,000 wire transfer that was part of a trust that's gone forever. And that can happen on the smallest scales too. So if you're afraid, that's good, because you should be. This is our agency got hit 2 years ago. I know, not bad, because we're ready for it. But it can happen to anybody, small business. Social engineering is the big one. That's what I just spoke about, where they're acting like somebody else. And by the way, it can happen in Facebook and stuff like that too, where they are engineering now a process looking like other people and creating problems financially. The malware, that's like vandalism, if I want to look at anything, because all they're doing is being jerks and creating problems and slowing your business operation down. There's a financial aspect to that on getting it cleaned up, but the big financial impact is social engineering, because that's when they're taking money away from you or making you liable for a bad transaction. I'm not going to go through each of these, but you can see some of the names, large organizations nationally that have been hit the last 3 years. Capital One, Uber, Facebook, Under Armour. Our first reaction is, I'm not a big company. I don't worry about it. I don't have enough money for them to worry about. Guess what? 43% of cyber attacks are hitting small business now, and only 14% of those are adequately prepared from a technology perspective and an insurance perspective to handle it. Here's the scarier point. 60% of businesses who have a cyber attack go out of business in 6 months. It's that impactful financially. Not only financially, but from a reputation standpoint. 10% of firms surveyed, the average cost of a cyber attack for small business was almost $200,000, and that's growing. That's growing every year. That's growing every month right now, honestly, with everything that's going on. It's in these scenarios, you always want to hire a forensic investigator. Those consultative fees can run anywhere from $10,000 to $100,000. Everything that you see here should be part of your cyber liability, cybercrime policy. So if these things happen, you have something that's going to respond effectively financially for you. Employment practices liability insurance. This is usually part of a workers' comp policy. It's usually like thrown in as part of it. We recommend limits of about $50,000 to $100,000 or more. Harder to get higher limits right now because there's a lot of activity on this. Folks are suing their employers for wrongful terminations because of COVID. There's been a lot of layoffs that potentially haven't been handled correctly. The restaurant and hospitality have been hit the hardest, and the medical sector. Those are the areas truly that have been probably hit hardest by COVID, and there's a lot of litigation that's going on there. But as a small business owner, you should always have this coverage. It's relatively inexpensive to protect you in hiring and firing situations. If you're part of a PEO model, always get your own standalone policy, because either the limits are too low, they're usually like $25,000, which isn't enough, or it's aggregated with all their clients. So if somebody has a big claim that's part of that the PEO, it's going to impact your limits directly. So we always recommend, even when you're inside of a PEO model and you're getting your benefits and your workers' comp through the PEO, have your own standalone policy for that, for added protection. Let's talk about the health insurance market, individual and group. I'm doing good on time. In the gross rates in the individual market, which are rates prior to subsidies, we're seeing a 10 to 13% increase right now on average from last year. It's really dependent on the zip codes in Florida and demographics. It could be less, it could be a little bit more, but on average, that's the range that we're seeing. We're seeing the same trend, similar trend with the small group market as well on group health. We're seeing a lot of traction with the new Hra legislation that was signed into law last June as an alternative to group health insurance. It was one of the things that ACA took away in 2011, and the current administration brought it back. So there's three HRA types now. I'm happy to talk offline if anybody has any questions, but one of them that's becoming very popular is the ability legally and also get the tax advantage to pay for individual policies for your employees. That includes Medicare. Now you can do that individually as a business owner by setting up what's called an ICHRA, individual coverage HRA, that allows you to pay those premiums on a pre-tax basis, which you couldn't do before. So it's a nice feature. You can actually utilize it in groups that have a mixture of independent contractors and full-time employees. I have clients that are using both. So we're seeing a lot of traction there. There's a lot of programs right now going on with the carriers for refunds, the gift card program, for example, from Florida Blue, where employees can watch a video for 3 minutes about the COVID and get a $300 gift card, that easy. So there's a lot of programs out there. Talk to your broker about them or reach out directly to the carrier and take advantage of them. There's bundling discounts. If you have a group plan where you can bundle your other coverages, your dental and your vision, your life, et cetera, and get some substantial rate relief off the medical as well. So have those kind of conversations right now. It's a lot of opportunity. Let's look at healthcare costs in Florida. And again, healthcare is not the same thing as health insurance, right? They're not the same thing. Health insurance is covering a risk, and some of us are going to self-insure some of that risk, but healthcare costs are different than health insurance. So these are some averages, some recent averages and ranges that I pulled from a variety of sites that I have on the slide below. But you can see the costs range. There's a wide range in what services cost. And the reason I'm showing that is you really have to be a consumer. This is how I'm going to save you some money right now individually, or as part of how the folks that work for you can save money. You have to be a consumer. You have to use the tools that I'm going to talk about that are available from all the carriers to research the best places to go for stuff. MRIs are not the same at every place you go. If you go to a hospital, you're going to pay a lot more than you're going to go to a standalone clinic like Rose Radiology. Use the tools. It's going to show you what things cost at certain places. Surgery is the same way. Physicians may do surgeries at multiple facilities. Find the facility that has the best contract. The best contract means you pay less as the patient. ER visits, we'll talk about other alternatives to that. A lot of people use ERs as a primary care. We're going to show you how not to do that. Another thing about healthcare costs, 5% of the population drives half of our cost as a nation. And of that 5%, the top 1% drive almost 25% of that spending. So it's about lifestyle. It's lifestyle with how you live your life, which is your choice, but it's also lifestyle and how you understand your health insurance and how to utilize it properly. I read an article just this morning that lifestyle choices could save our nation $730 billion a year in healthcare costs. That's smoking, drinking, eating right, exercise, et cetera, et cetera. But the other aspect, again, is understanding your health plan, because if you don't know how to use your health plan, that's going to drive costs too. This is some information from United Health Group, which is the ownership arm of United Healthcare, that shows 85% of us spend out of pocket each year less than $3,000 out of our pocket. So when you're looking at your own premiums and your costs, remember that when you spend money on insurance, that's money on the table that's gone. So you may want to say, hey, I can accept some risk here, spend less on my premium because I've got some money sitting aside on a rainy day, and maybe have a higher out-of-pocket plan that if something really bad happens, I'm going to have the plan's going to kick in at that point and not have to worry about expenses beyond $7,000. But if it's less than $7,000, I can handle that financially. Why spend extra money on insurance that you don't need? That's why I kind of show this slide. Each of us is different with our risk. Ways to save money. Have a health plan, kind of like a hurricane plan in Florida. Know ahead of time where you're going to go. When you're in an emergency situation, is not the time to make decisions. So I always tell people, have the apps on your phone. All the carrier apps now track where you are physically, number one. Number two, they know your network, and if you're in an emergency, they're going to tell you where to go. You're in the car driving, boom, this is going to be the closest place to network. Urgent care clinics can handle most things as long as you're not dying. If you're dying, you go to the ER. If you're in an automobile accident, having a heart attack, or you are bleeding to death, go to the ER. If you sprain, if you need stitches, if you may have a broken bone, urgent care is great because they can do all that now for a lot less. Then the next level about that, if you can't see your doctor, is convenience care. Some of the Walgreens and the Publix, you can walk in now and you can do stuff there for the cost of a copay. We're going to talk about virtual med too, which is really huge right now in this presentation. So let's summarize. Understand your pharmacy benefit. Pharmacy is the fastest growing aspect of a health plan. 3 years ago, it was 25% of cost. It's going to pass over 50% of cost by next year. Keep in mind, not to get political right now, it's going to come across that way, but it's important for you to know so you can be a good shopper. The United States and New Zealand are the only two countries that allow advertising of pharmacy in the world. Think about what's on a TV every night right now that's wanting you to have those kind of conversations with your doctors. For every dollar that's spent in R&D in the United States on medications, $19 is spent on advertising and lobbying. So I say that because you can control that spend, and I'm going to show you some ways to do that. It's important because it's going up. It's getting greater and greater every year. Not all formularies are the same. Go and use the tools, shop the pharmacies, and find out the best place to go for your drugs. You may find yourself shopping at 3 separate pharmacies, but it can save you a significant amount of money if it's convenient for you. Discuss the generic alternatives and over-the-counter medications with your doctor. Don't self-medicate or make those decisions on your own, but talk about options. If generic works for you, it's a great way to save money. Utilize the discount programs available at all the retailers too, at the Publix and the Targets and the Walgreens out there. They have programs. Know your network. The facility contracts versus the surgical contracts, it's important. We talked about that. And then the virtual med. Take advantage of it. It's great. If you're not feeling well, you don't want to go to the ER, you want to go to urgent care, use virtual medicine. Speak to a doctor on the phone or Skype. They can prescribe medications to a 24-hour pharmacy right off the phone. You can save yourself a visit and also get faster care. I use GoodRx. There's a variety of options out there. It's great. Many times I'll use this instead of my insurance because there's specials that are going on that are always there. So it's a great app. There's other ones like it, but this is the one I've been using. It's a great way to save money on some pretty major prescriptions, like if they're running specials on biologics like Humira and others, you can save a whole bunch of money here. That's the presentation. I skimmed through pretty fast. Sorry, I wanted to make sure we had time for questions. So here's the exam question for everybody. What percentage of the United States is either low, moderate, or high risk flood zone? This is for the free lunch at BlackRock. Send in a chat note if you know the answer. I don't see any chat notes. Are you seeing them, Sharon?
Yes, I see several.
Who was first?
I think, let me make sure here, because I have this silly cursor that I hate. It looks like Misty.
And what was the answer, Misty?
25%?
Oh,
Oh, jeez.
So the next one was David, I believe.
David, what was your answer?
100%, Mick.
How much?
100%.
Dave Dorsey, you got a free lunch at BlackRock.
All right.
I've got your email address and your address, Dave. I believe I'm going to mail it to you. Okay.
That'd be
Congratulations.
Good,
Again, very important thing along with cyber. Everywhere. And you know what? Florida, I don't care what every inch of Florida, big time. We're on a peninsula, folks. So I hope you found that helpful. I'm going to open up for any questions right now.
Yeah, you guys, whoops. Anybody have any questions?
Yeah, I have a question, Mick. You know, after listening to your presentation, a side of me wants to go off the grid. You know, meaning, you know, I guess it's your job or an insurance agent's job to let you know what kind of risk you have. You know, I mean,
Yeah.
I'm being facetious, but I might get hit by a meteorite walking to my car. So, I mean, you know, and then insurance, that being said, I'm old enough to know when there is a claim, which I haven't really had many, and I don't want to have any, but the insurance companies are, the first thing a lot of them do is try to wiggle out of it and try to see if they have to make good on the claim. That being said, I think a good insurance agent's job would probably be to help you up front to document things. So if there is a problem, you know, that's the first thing the insurance agency is going to say is, okay, Mr. Fox, what did you lose? Document it for us. Well,
Absolutely.
That's a problem because it might already be gone. You know what I mean?
Mm-hmm.
If you asked me what was in my garage today, I couldn't tell you. You know, so I don't know if you have a solution to that. You know,
Great question. So part of the process when you're getting any coverage is your broker should be sending you applications that have questions on them. For example, cyber, it's going to have specific questions. What about your operation? How you do things, how you do certain things. Do you have these controls in place? This, and that. And sometimes people aren't honest with their answers because they think, oh, I'm not going to be able to get insurance because I need to lie about this. I need to tell them I'm doing all this right. Our whole approach is answer it honestly, so we can, if there's gaps, we can help with risk management now to say, this is as simple as creating this document, right? Here's a template to do that. A lot of the carriers will offer that service to you as well. They'll just say, we'll do this for you. But it's more, here's the point, it's more than just getting a quote, Jeffrey, it's more than getting a quote. It's really having that consultative conversation to really find out what you need specifically. Where is your risk in your operation? Like I said earlier, insurance isn't always the answer. Sometimes it's, well, I've got all this stuff stored here, and if we get hit, I'm going to lose $100,000 in medications. It's a refrigerator unit at a doctor's office, let's just say as an example. And they have equipment breakdown insurance, and they assume that if that refrigerator breaks down, they've got coverage. and they've been spending a ton of money on this insurance because they assumed all this time if they lost power, it would be covered. Irma hits in 2017. Their power goes out because Duke Energy shuts off the grid. That's human intervention. That's not a covered loss.
What's a pestilence?
So what happened to this client, they weren't a client at the time, but they became a client afterwards, was they thought they had coverage for their infusion therapy that was sitting in a freezer at their office. So they were in no rush to go back and move the product someplace else. They lost $200,000 because they're covered, because they weren't educated properly on the coverage. Again, insurance wasn't the answer for that loss. The answer was have a backup battery that's going to give you 24 hours to get back on site and get those drugs off site and someplace else. So that's risk management versus insurance. You follow? So you have to have those kind of conversations on your risk and understand it.
Well, that
sure.
and also things change. I mean,
Absolutely.
circumstances change quickly. Every 6 months or something like that.
One of the,
I mean,
a situation that happens with us sometimes is a client will forget to tell us things that have changed in their business. They've got a new facility. They're selling a new product. They have new items in their inventory. We find that out at the renewal, and we're always saying, you got to let us know when that happens, when it happens, so we can ensure those updates to your coverage are made at that time. So if you do have a loss, it's considered in your limits.
well, I mean, it's crazy what the media does now in California. I mean, just watching on TV every night, somebody's whole house just burns to the ground, not one thing left. And God forbid, I would hate for that to happen to any of us, but we're all at the same type of risk, for something like that to happen. And I just don't know anybody here or any of your clients if they have everything as documented as they should. After listening to you, oh, you do? Okay, well, I'm thinking of doing the same thing. Go at least taking a picture and saving it on Google somewhere, where it's not at the place. I love when my Spectrum goes down, and then I have to go off site, and they tell me to call, and I say I can't call you because the Spectrum's, it's a circular conversation, and what you're talking about is very important to everybody. Is insurance.
Take that extra time to go through your policies with your broker, ask a lot of questions, have them leverage the carriers, leverage the carrier support to say, hey, I am with you as a client. I want to make sure I'm insuring my risk appropriately. Can you help me? Many of them, they will absolutely freely do that for you because it's helping them, right? Because now
they'll give you an inventory sheet to fill out, that type of thing, or take pictures, or
they'll provide you the templates you need to use. They may even help actually build the stuff. Yeah.
Wow.
Great question, Jeffrey.
Thank you very much. You did a nice job on your presentation.
Anybody else have any great questions like that?
I actually have a question. And Jeffrey, going back to what you were asking, yes, I'm like ridiculous. So anytime I buy anything major, I scan the receipts and upload them onto cloud, and I also have them on my computer. I have them saved in 3 different locations. So, and then I go through my house every once in a while, video camera, everything, and I have it saved on an external hard drive.
You have OCD, don't you? You have OCD like I do. Yay for OCD.
I'm very organized with stuff. I'm OCD on organization. So my question is that how do you calculate the construction cost to your house?
That's a good question.
Great question. So you want to go to the property appraiser site?
Yeah.
For your business and your house.
Okay.
And if you've done work that they haven't pulled a permit,
okay.
Once I've done that, it's not going to show up,
Mm-hmm.
right? Necessarily. You're going to want to walk through your house and say, we spent $20,000 on that new kitchen, or we put that new bathroom in, and that might not be showing up on the appraiser site yet. So you're going to want to make sure that rebuild, that replacement cost is calculated. If you put a lot of money into something, you want to make sure if something bad happens, I'm going to get that back because I made an investment in my home or I made an investment in my business.
Right.
That's
Well,
how you
that
make
goes-
sure it's really.
Okay.
Yeah.
That goes back to me saving my receipts, like keeping my receipt for my roof, keeping my receipts when I've had construction done, keeping my receipts for the air conditioning that I had replaced. Okay.
Absolutely. Yeah, it's important because if you got to have a home that you just haven't that you just put a new roof on, it's going to bring your rates down. So you definitely want to track that stuff. You want to make sure all that.
Okay.
You've had a lot of plumbing work done in the house. There's less risk of water backup. Your rates are going to go down. They're going to give you credits for those things. So it's important to know that.
Okay, cool. Thank you.
No problem. Good, really good questions. Have any more great questions?
It's not a question, Mick, but I'd encourage you to read your policy too, because I just got a renter's policy very recently, and there was theft included. And I got the policy, and a couple of weeks later, I was reading it, realized that the theft has an exclusion if my front door lock, or any door, is not a double-sided key lock if you have glass next to it. So if somebody could just break the glass and reach in and turn the knob there and get in. So now I'm going to go out and buy a lock because I didn't realize that it wasn't part of the process of purchasing it, but just because I read it, and it's hard to read those things and they're long, but I'd certainly encourage it.
Great point, Eric. Really good point. It's true.
Great point. And a lot of times I know just for laymen like Eric, I'm sure you understood it, but some people don't. And it's the way sometimes things are worded almost to, where you don't understand it and you don't know. And that's a big thing too, is to know what is it that I need to protect? Some people don't know, what is it that I need to keep track of? So this was all great information.
And here's the really good news here. I don't want to freak everybody out too. What we find in many cases, and actually in most cases, that's an honest response. We do find situations where folks are overinsured or underinsured, but most times when we go through someone's policy, we find that where they're at and what they have is exactly what they need. So for the most part, folks have done a good job as brokers, but it's always good to get a second set of eyes on stuff. And if you're with a good carrier and you've got the right coverage, we're going to recommend you always stay with the carrier. You want to build credibility in the market as much as possible and show that you don't hop. Now, if you get a huge increase, absolutely. But if it's fair and standard in the market at the time, sometimes the best peace of mind is just knowing that what you have is what you need.
Question, Mick, though, what about carrier grades? Like, I understand now that there's different carrier grades out there. So is it better to change to go to a better carrier grade, even though you may not necessarily have a change in your amount that you're paying in your premium?
So the way that the carrier grade impacts, it's their ability to financially respond in a disaster, right? So that's important in Florida, right? We have a lot going on here in our state. It's a great question and a great comment. So you want to have the best financially rated carrier possible. Depending on your risk, where you're located, the admitted market that you're talking about, okay, right? The admitted market might not write your risk because it's on the beach or it's in a bad area that they don't want to write anymore. We have to turn to the non-admitted markets at that time. But if you're with an admitted carrier, even though it might be a little more expensive, never let a broker, it's actually unethical for a broker to convince you to leave an admitted carrier to go to a non-admitted carrier because of that reason, because of their financial grade. It's very important in Florida. Great question.
Thank you.